Welcome to another session of OOIDA's Business Education Series. OOIDA is proud to offer the most comprehensive business education series available for America's professional truck drivers. We would like to thank our many friends in the industry who take educating America's professional drivers as seriously as we do. With the help of these sponsors, we've been able to make the programming on the Business Education Series free to all drivers. This program is being sponsored by our friends at Taxation Solutions Incorporated. When you need tax consultants with experience, the right credentials, and the ability to help with penalty abatement, audit defense, and tax settlements, look no farther than Taxation Solutions Incorporated. Taxation Solutions has experienced tax attorneys and enrolled agents that have assisted taxpayers with negotiating and settling their IRS debt. Their overall goal is to get you only the best deal available with IRS relief. Live again without the fear of the IRS. Contact the professionals at Taxation Solutions. You can reach them on the web at www.taxationsolutions.net or by phone at 888-997-2215. The topic for this series is dealing with the IRS. In this series, we're going to be discussing tax issues which, unfortunately, are all too common in the trucking industry. And in this program, we're going to be talking about 12 things you can do to beat the IRS legally. My name's Tom Gann, and once again, I have the pleasure of hosting this program. I truly am honored to have Barry Fowler as our guest on this program. Barry is the president and founder of Taxation Solutions Incorporated, and he also holds the title Enrolled Agent. And for those of you who don't know, this Enrolled Agent status is the highest credentials the IRS awards. These enrolled agents, they're unrestricted as to who they can represent. They can represent their client for any type of tax matter, and they can also represent them in any IRS office around the country. Barry's been recognized as one of America's premier experts in IRS relief and taxes. He's helped hundreds of people solve complex tax issues with the IRS, and we're truly honored that he's agreed to be with us here today to share his insights. We've got a lot of material to cover with Barry in this program, so we're probably going to run it a little bit over on our time frame. Please bear with us. Let's get started. Okay, Barry, I know this title, How to Beat the IRS Legally, is a big deal. Everybody wants to beat the IRS. And I guess what we're going to talk about today are 12 things that are mistakes most people make where they could save thousands of dollars if they only knew to do this. And I guess that kind of leads into the very first thing is planning for your taxes. And that's something that people just don't know a lot about. You know, in high school, we didn't learn about taxes. And so you come out here, you start running a business, and all of a sudden you've got all these taxes, you don't know anything about it. So if I'm new to owning a business, or if I'm planning on opening a business, what are some of the things that I need to do to plan for taxes?
Well, I think you nailed it. The first and the biggest mistake of all is just failing to plan. And I really don't care how good you are or how good your tax preparer is with a stack of receipts on April 15th. You can miss so many things by not planning ahead. And one of my favorite quotes here is Judge William Rehnquist, a Supreme Court judge, said, "There's nothing wrong with the strategy to avoid the payment of taxes. The Internal Revenue Code does not prevent that." That's where we go with planning. And one of the keys to planning is a good financial defense. It's actually going to set the stage and the map, so to say, of how we're going to guarantee results with planning and give you all the advantages of the tax laws that there is.
You know, my accountant talks about gray areas. You know, he told me that, well, we can go into these gray areas. It's just a matter of whether you want to take the chance. When he said that, I guess I really wasn't sure what he was talking about. When we talk about tax planning, I know there's some areas that are kind of risky, whether or not you want to get involved in.
Well, when we talk about the gray areas, I kind of use it as a football analogy. You want to be 1st and 10 inside the 20-yard line, but you don't necessarily want to have to score that touchdown that's going to set you up for a problem. So, we want to be close, but we don't want to go through the line. What we're trying to do is move as much of people's income in tax planning to where they're spending pre-tax dollars. That's dollars that are spent before they're taxed. So whether they're spent in the business, spent through the business to accomplish personal things, it's deductions and credits and tax planning that will save people tax money on their bottom line. Because what you're going to do is reduce the taxable income down as far as you can without scoring that touchdown to where they're going to throw the flag possibly on you, and get your taxable income low enough to where you're in a lower tax rate.
I think when a driver moves from being an employee driver to a business owner, I think a lot of guys get caught off guard on tax planning. When you're an employee, 1st of April, you start thinking about, boy, I better get all my tax stuff together because I got to pay my taxes by April 15th. But when you're a business owner, tax planning is a full-time activity. You've got to pay quarterly taxes. And I know that catches a lot of guys off guard that first year. And even guys who have been in business for a while, they kind of let it slide. They start getting all their tax stuff together right before each deadline. And that's not really the way a business operator needs to plan for their taxes, is it?
Exactly. And the quarterly filings, the quarterly estimated taxes need to be paid. And it's weird quarters for the IRS because it goes April 15th, June, then September, and then January. So it's not your normal quarters you would think of. But one of the things that we try to do with a lot of our OOIDA drivers is get them into bookkeeping so we can kind of stay ahead of the game with them and help them plan as they go through the future, but also help them plan for beating the taxes that the IRS wants to charge.
Now, when we talk about that bookkeeping, a lot of guys tell me I can't afford a full-time bookkeeper. When we talk about bookkeeping, a lot of times it's just getting a bookkeeper to set you up. You do the actual data entry, and then you get with your bookkeeper on a quarterly basis. Is that how you recommend people do it?
Well, we kind of work with people on a month-to-month basis, and most of them just send us their receipts, their check register, their bank statements, and we take care of everything from there. And it makes it a lot easier. These truckers are on the road so many days out of the year that they don't have time to even keep up with this, and that's, part of where we come in.
Yeah, they may think they're saving money by doing their own books, but boy, it is really a hassle, especially when you're on the road.
I save most of our truckers more than they could ever afford to pay anybody to do it. They would pay a lot more in tax, and I'm going to save them all that by, us helping them with their bookkeeping and getting them on down the road. And they can concentrate on what they do best, driving trucks, and I can concentrate on what we do best, saving those truckers money.
Now, to set up or start planning for your taxes, what's some of the first steps a guy should do?
Well, the first step is looking at the prior year. What expenses and what deductions you had, and then planning to a budget of where you're going to plan on going this year. And then working with us or any other tax professional to kind of walk that line to see what deductions they've missed, what deductions we can add in, and get them within that goal line and that 1st and 10 inside the 20. One thing that keeps people away from getting inside that 20-yard line is what we would call our number 2 most expensive mistake, and that is an audit paranoia.
Yeah, everybody wants to beat the IRS, but everybody's afraid of that audit, aren't they?
They certainly are. And, we deal with enough of them around here, and Taxation Solutions deals with people nationwide that have tax problems and have had IRS problems and audit problems. But what most people have got to understand is that Schedule C, which is a small business, self-employed, if you're making under $100,000, there's only about a 3.6% chance of being audited. If you're under that 100,000, it drops to like 2.4, and under 25,000, it drops to 1.2. But if you're in a partnership or you're in an S corp, that drops down to like 0.5%. It's not really that big of risk of being audited. It's just knowing how to avoid the red flags.
The red flags, that's the big deal, isn't it?
It very much is. And if you can avoid the red flags, the audit possibilities go down, to even less than that. You got to have somebody on your side that knows what they're doing, how it's going to help you down the road, and help you avoid what the red flags will be.
I talk to a lot of drivers who seem to be overly paranoid about red flags. And one of the things that comes up in discussion all the time is they're afraid to claim their per diem. And for a driver, per diem is a pretty high number. So does it make sense for them to be so paranoid about the per diem amount triggering a red flag?
It is not a red flag for our truckers that are over-the-road truckers, meaning that they're spending nights on the road and away from home. Where we get in trouble, or where our clients do get in trouble, is when they're taking those per diems on local transport. So they have no support, no evidence. But most of our truckers have great evidence of that they've been on the road overnight and don't have any problems there.
A minute ago, you talked about LLC and a S corp. You mentioned that there are less red flags, or your chances of being audited are much less. How should I set up my business?
That brings us to number 3 on our 12 most expensive list, is wrong business entity. Everybody's business, we have to sit down and look at and say, what are they doing? If they're only running maybe $25,000 a year, which most of our truckers are not, they're running much more than that. You can be a sole proprietorship, get all your tax deductions, you won't have very much tax, and your audit rates would be very low. But you do have choices out there. You could be a C corp, you could be an S corp, you could be a partnership. The way those kind of differ out there is your sole proprietorships report everything on Schedule C, and you pay all the self-employment tax. Your S corporation is going to split the proceeds into a salary and an income. And on your salary, you pay the Social Security and Medicare tax. And on the distributions or other income, you only pay the federal tax. You pay no Social Security tax. And then the LLC side of it is, if you can be a dual member, maybe husband and wife, or maybe you're in a partners with somebody, then we don't have to worry about the payroll side of it. We use a guaranteed payment and save yourself on that Social Security and FICA tax out there. That will save you that 15% on anything that's not, payroll. Now, the beautiful part is that your audit risks drop down to less than 1%, and it keeps all what I would like to call the trash off your personal tax return, which means it shows no business income in gross amount, doesn't show all your deductions against it. It's all shown on a corporate or a partnership return.
I like that, getting rid of the trash.
Somebody's got to take the trash out.
Yeah. What about a driver who's set up his business, say, as one entity, maybe a corporation, and the tax professional he's going to recommends that they change it to a different type of entity? Is that a big deal to change how your business is set up?
It isn't for us, because we will actually walk them through that change. There's a lot of things we've got to do, getting the organizational side set up, and then getting our clients to change their bank accounts to the corporate or LLC accounts, and then working with them to move their assets, which is like their trucks and their trailers, over to the corporation. So there's a lot of little things to do, but we're able to walk them through step by step to get them there.
And I think that's part of the problem. Most of the guys are just so confused about the steps required that they're afraid to even try.
Well, that's exactly the case. And they think, well, I've been doing it this way for years. Why should I change? It's because we want to find a way to save them as much tax as possible. Can you imagine going from paying maybe $10,000, $15,000, or $20,000 in tax and maybe even cutting that in half?
Yeah, that makes it worthwhile, doesn't it?
Absolutely.
Okay, let's talk a minute about retirement plans. I think that's number 4 on our list. And I hear guys all the time say, I don't have the wrong retirement plan. I don't have one at all.
Well, that's the first thing we need to correct and get them into a retirement plan. And if you're not running one at all, then you can start with the simple, which is the IRA, but it has the lower limits. Now, as a self-employed person or even running your own S-Corp or LLC, you can set up those simplified employee pension plans, simple IRAs, or even the 401ks. I'm not here today to make anybody an expert on those plans, but we can pretty much help everybody decide what plan is right for them and how to save the most in the correct plan.
If they're set up correctly, it takes a lot of the pain out of setting that money aside when you know it's done right and you're confident that it's going to work out in the end.
Exactly. And you got to realize that that money is going to go in pre-tax. Most pension plans or most retirement plans that we set up are going to be pre-tax plans. We're not going to use the Roth right at the moment. We want to put as much money into an IRA or a 401k or SEP plan to save them as much as possible on their employment taxes. Now, if you have a SEP set up the right way, you could put up almost to 25% of your net self-employment income. So you've got, for 2015, a maximum you could put into that account at $53,000.
Well, but so many of them tell me, yeah, I can put that away legally, but if I do, I can't eat.
And that's why we try to work with them to set up a plan to show them what the cost-benefit ratio is for them. But we've got to set it right so that you can eat, so you can drive, and you're not strapping yourself for cash flow. Because the last thing we want you to do is pull it back out after you put in, because we don't want the penalties for early withdrawal.
Let's talk a minute about hiring your wife or your children as part of the business.
Well, that's number 5, missing that family employment. You can employ your family, and depending on how your business is set up, there's different ways we can do it, to where you can employ your wife to do certain things for you. You can employ your children that are over 7 years of age. Now, one of the good things about children is the first $6,300 could be tax-free, and the next $9,000 taxed at 10%. But it's got to be a reasonable wage for what they're doing with a written job description. Yes, they would like timesheets, and they should have their own account in their own name.
When you talk about their own account, are you talking about their own bank account?
Own bank account.
And why is that important?
It's a great way to start saving for college education. Even if you're going to use money, let's say, to put them in a summer camp, it's a great way to employ them, pay a lower amount of tax based on what they're earning, and then let them, or you, basically spend the money for that kid to go to a summer camp or maybe their education or whatever it is at that point.
Now, when you employ a family member, is there some advantages for the medical benefits for that person?
Depending on who you're employing and how you're employing them, you can use it to cover the family's health cost. And that's number 6 on our list, missing medical benefits. What you're going to do is, if you're paying your own health insurance, you can do a health insurance plan through the company and have your wife cover you and the kids as a self-employed or as a employee of your business. And you can now deduct that from your business expenses. And then you can also set up like a medical reimbursement plan to where it'll reimburse all uncovered medical and dental costs. So your business will cover all that with pre-tax dollars. You'll need a plan, what is called a Section 105, and a medical reimbursement plan put in place for your company, but it makes it deductible expenses before tax.
Okay, let's be clear while we're talking about this so guys listening aren't confused. We're talking about setting aside money so they can buy a health care plan. We're not talking about getting a health care plan from, say, my tax professionals.
No, absolutely not. We don't sell insurance at all.
Hey, Barry, I want to build a 4-car garage where I can keep my truck and my boat and some of those things in. And I also want to have room for a pool table. And, I'm going to put a computer over in a corner so I can claim that as my home office. Is that going to work?
Absolutely not. We get the question all the time, well, why doesn't it? Well, here's how you qualify for the home office deduction in the first place. Your home office qualifies as a portion of your principal place of business. One, you got to use it exclusively and regularly for administrative management activities of your business. And if you have no other fixed location where you conduct a substantial amount of business, you can then deduct a portion of your house. But again, we've got to back up because it has to be exclusively and regularly used for administrative or management activities of your trade or business. So yes, you cannot have an area where you got a pool table, an area where your kids play. It's got to be a separate room and only used for the business.
It could be a spare bedroom in the house as long as that's all you use it for. Isn't that right?
Exactly. It can be a spare bedroom. You may even have a larger area that you do it. Speaking of the truck, you may have land and you may maybe park it in covered parking or something, and you do that just for the truck. That can be deductible as well. It's just got to be used exclusively for your business. When you do have the office in the home and you've got an area exclusively used for businesses, you can deduct a portion of your property taxes, a portion of your utility, security, cleaning, office furniture. So you have all that available to you when you do have that in the home. But again, it's just got to be exclusively used for that as well.
What about missing deductible business expenses? What the heck are we talking about?
Well, for a company driver, you're only limited to non-reimbursed expenses that are required by their employer. Those are only available if you're itemizing it on Schedule A. But other expenses that are missed all the time is what the driver actually does for their business and in their business. Now, what we see a lot of times is they're afraid to deduct this expense or that expense just because it doesn't look like it passes the smell test. What we use is if it's for the business, it is definitely a business expense. So we try to make sure that when we're doing bookkeeping with all of our clients is go through a litany of questions that will identify other business expenses for them to make sure they're not missing them. Just because you pay cash for whatever expense you happen to have out there at the time doesn't mean it's not deductible. Just need the receipt.
Yeah, if I need new windshield wipers and I run in someplace real quick and grab some and put them on myself, I may pay cash for those. Well, I really need to keep track of that expense.
Yes, you do. And the interesting part is that driver would turn to me and go, hey, my time, is that deductible too? Nope, sorry.
The other day I was doing some maintenance on my truck and I needed some parts. I jumped in my car, I drove down and picked up some parts and came back and did some work. Can I deduct part of my car expenses?
That is one of the other biggest items that's missed by our truck drivers because they think, okay, it's not driving my truck, so therefore it's not my expense. Yes, going from your house to go pick up parts to go work on your truck, or going from your house to get to your truck, if you've got to home office, we can take advantage of the miles to go from your house to the storage lot that your truck's at. There's all kinds of expenses that are missed there. Just because you're not driving your truck doesn't mean it's not related to the business. It doesn't mean you can't deduct it. Keep track of your mileage log of where you go for business in the car and where you end up and the business purpose for it.
Now that mileage log, that can just be a 3-ring binder or a spiral notebook, and you just write down the mileage you use to go get parts or whatever.
Exactly. Or if you're working with us, we give you a nice little mileage log you can write in every day, and we'll give you a new one every year.
Oh, another logbook. Great.
It's small. It's small.
All right. Now, I see the next two items on our list. They look to me like they're kind of the same thing. Number 10, we're talking about missing meals and entertainment expenses. And for number 11, we're going to talk a little bit more about missing per diem expenses. Is there a difference between meals and entertainment and per diem?
Very definitely. What you also have is when you're going to some of the trade shows and the truck shows out there, you're going to have business meals for attending those. You may be employing other truckers in your business, and meetings with those drivers are deductible. So if you're out having lunch, if you've got referral sources or people maybe that are providing loads to you, those lunches or dinners are deductible. If you can relate your business meal to business, it's business. Now, let's go ahead and extend this out a little bit. Your wife is working in this business with you. You guys go out to dinner and you're discussing business. It's a business expense. There's a business purpose for that meal, and you had an actual business discussion during that meal. That meal becomes deductible.
And I suppose you'd also be able to deduct the mileage in your car to go to that meal.
Exactly, and coming back. Now, the business expense of meals and entertainment is only 50% deductible, but at least it's deductible. It saves you money on your taxes.
Hey, that's paying for her meal.
That's exactly right. And what we've always been talking about in this whole program is reducing the adjusted gross income, which is the dollars you get taxed on, by spending pre-tax dollars.
Per diem. Let's get back to that. I can only claim a per diem if I spend the night on the road. Is that correct?
Basically, that is correct. Now, we will include the day that you end that travel, so it may be one night, but we get 2 days in there. And we generally have been using the per diems of about $59 a day, and it's deductible at 80%. Now, normal meals and entertainment are only deductible at 50%. But because you're in the trucking industry, those become 80%. And I believe you guys got a really good program on per diems.
Yes, actually we do. The title of that program is Taxes, the Pros and Cons of Per Diem. And my guest on that program was Jim O'Donnell. Jim did an excellent job of explaining per diem. So if you'd like some more information on per diem, I recommend that you also take that program in this series. And of course, it's free too. And if I'm remembering correctly, I believe Jim said that drivers don't really need to save the receipts for the meals when they're on the road. It's just a flat fee per day. Am I remembering that correctly?
That is absolutely correct. We never ask for a receipt of what any of our truckers have spent while they're on the road for their meals. We just get the number of days. And the best thing is to just refer back to the trucker logbook, and we can get the number of days that are on the road right from there.
Yeah, so it's normally the number of nights you are on the road plus 1 day.
Exactly. And it also depends on where you begin and end each one of your trips. So you would add a couple of days here and there, depending on how long your trips are.
One of the big things that we need to talk about is a tax coaching service. Let's touch on that a little bit.
Missing a tax coaching service is probably one of the most expensive mistakes you can possibly make. What we do is a true tax plan. It becomes a written plan. And our coaching service will actually try to keep as much money in your pocket as possible.
How do they do that?
By actually sitting down and getting a written plan together for their family, their home, their job, their investments, or their business, a complete review of the current and prior returns to where we can find as much money that they can get back from the IRS as possible.
What all's involved for a driver to work with a tax coach?
The way our tax coaching service works is we will kind of do it in a multi-step process. One will be gathering information from our truckers, possibly while they're on the road. And not only do we work with the truckers, but we work with their wives and family members to help us get the information. Then being able to sit down and go through that information with them on the phone again. There's no sense in having to be at our office when we can handle all this stuff via phone. There will be some paperwork that will be needed, but we can accomplish most of everything we need to do just asking the questions and getting through the answers. If there's anything we do need, we ask them to gather it, and you got plenty of time to do it. What we want to do is avoid all the most expensive mistakes that people make on the tax returns that end up costing them thousands. We want to keep those thousands in their pocket
Okay, it looks like we're completely out of time. If you've got any questions or comments about this program, or if you'd like a certificate of completion for this program, just send us an email to businesseducation@ooida.com. And don't forget to tell us which program you're referring to. Before we get off the air, let me take a minute to remind you to thank our sponsor, Taxation Solutions Incorporated. If you're having a tax problem or you're in need of strong, aggressive representation to deal with the IRS, the professionals at Taxation Solutions can help you reach a resolution by providing the proper knowledge, action, advice, planning, and preparation. It's not too late. Contact the staff at Taxation Solutions. You can reach them on the web at www.taxationsolutions.net. Yes, .net. Or by phone at 888-997-2215. We hope you'll join us online again for additional programming in the OOIDA Business Education Series. This series has been designed to give serious business education to truck drivers who take their business seriously. And don't forget, OOIDA has been fighting for the rights of all truckers since 1973. You can join the fight by becoming a member of our organization. Give us a call at 800-444-5791.